Welcome to Brian's CPA ASPE review for CFE and Core. Today, we are going over ASPE 3831, non-monetary transactions, also known as NMT. Businesses exchange and transfer assets or liabilities, which include no money. What is non-monetary transactions? It is an exchange of goods or services without money changing hands. In other words, non-monetary transactions do not include monetary considerations. For example, such non-monetary transactions include items like assets, liabilities, or services. For definition of non-monetary transactions, it is a type of exchange of non-monetary with little or no monetary consideration. A typical exchange would be an exchange of property, plant, and equipment, inventory, or any intangible assets. For recognition of non-monetary transactions, businesses must meet any of the following. First, transaction lacks commercial substance. If there is no monetary gain as a result of the transaction does not have a commercial substance. Transaction is an exchange of product in the ordinary course of business. Businesses can exchange a product in exchange they sell ordinarily. Neither fair value of asset received or the asset given up is reliably measurable. It means that it is difficult to determine the amount for the fair value of asset or asset given up. Transaction is a non-monetary, non-reciprocal transfers to owners. Businesses provide goods without receiving any payments in return. Recognition of non-monetary transactions. If any of the four following are met, we have a non-monetary transaction at current value. For example, current value of company's inventory is $5,000. Exchange of inventory with another company's asset is measured at $5,000. If none of the four are met, fair value of the asset given up or received, whichever is more reliable. For example, an asset given up is equipment. Fair value of the equipment cannot be determined. However, the asset received is stocks of ABC, and the fair value is $2,000. In this case, non-monetary transaction is measured at $2,000. Let's now consider a scenario. Anna and James are roommates. A friend of Anna gifted her a movie ticket. However, Anna is too busy and cannot go to the movies. James likes movies. Anna offered James a movie ticket in exchange for a car ride for a week. This is a non-monetary transaction because two of the four non-monetary transactions are met. This transaction lacks commercial substance. Neither Anna or James will be getting money as a result of the transaction. Another one is transaction is neither fair value of asset received or the asset given up is reliably measurable. Movie tickets are at $10, however, it is difficult to determine fair value of car ride. Because two are met out of four, Anna can record current value of movie ticket as a non-monetary transaction. For subsequent measurement of non-monetary transaction, any subsequent gain or loss from non-monetary transaction is included in net income for the period. Let's look at an example. An advertising company, Studio 88 Marketing, purchased a trademark for a French clothing brand Lacoste SA in exchange of providing advertising services in the streets of Milan, Italy. The fair value of Lacoste trademark is valued at $250,000. Advertising in streets is not a regular business model for Studio 88 marketing, and fair value cannot be reliably measurable. Studio 88 normally sells marketing services via online platforms. Studio 88 Marketing had earned sponsorship revenue of $35,000 as a result of advertising in the streets of Italy. To recognize, we must see if any of the four non-monetary transactions are met. The first criteria is transaction lacks commercial substance. Exchanging advertising services for acquiring trademark will certainly result in exchange in the cash flow. There are significant changes in the risk and timing for such transaction. Therefore, the transaction has commercial substance. The first criteria is not met. Transaction is an exchange of product in the ordinary course of business. Street advertising is something that Studio 88 Marketing normally does not practice their business on, as they normally advertises via internet. Because the exchange is not the ordinary business practice, this is not met. Neither fair value of asset received or the asset given up is reliably measurable. Fair value of the trademark can be reliably measured at $250,000. However, the street advertising cannot be reliably measured, as such marketing is not developed by Studio 88 Marketing for non-ordinary operations. Therefore, this is not met. Transaction is a non-monetary, non-reciprocal transfers to owners. Studio 88 Marketing acquired trademarks of Lacoste in return of providing advertising services. Both parties will benefit as a result of the exchange. Therefore, this is not met. Because none of the four criteria are met, we cannot recognize non-monetary transactions at the current value. We must measure at the fair value of asset given up or received, whichever is more reliable. The trademark fair value is measured at $250,000. However, fair value of street advertising cannot be determined and therefore cannot be reliably measured. Studio 88 Marketing can record non-monetary transaction at $250,000. Keep in mind that there is sponsorship revenue of $35,000 due to the transaction. We debit trademark asset account by $250,000 and credit sponsorship revenue by $35,000, and the difference of the trademark and sponsorship revenue is credited in the accounts receivable by $215,000. In summary, non-monetary transaction must meet any of the four criteria to be measured at current value. Otherwise, it is measured at fair value of the asset given up or received, whichever is more reliable. That's it for the review of non-monetary transactions under ASPE 3831. I hope this information was helpful for your studies, and feel free to contact me if you have any questions. Best of luck with the studies and have a great day.